Okay, my next guest is disrupting, so to speak, the traditional world of investment management. Jon Stein is the CEO and founder of the online investment site Betterment. It's a company that was named New York's best startup at TechCrunch Disrupt in 2010. And if Jon's predictions come to pass, it may mark the beginning of the end for banks, at least for your average investor trying to be invested in the market. So great to have you, by the way. Welcome to Fast Forward. Let's talk about Betterment. I mean, a lot of people think that they probably already have access to a company similar to Betterment, right? Vanguard, Fidelity. So tell me how Betterment is different.
So I founded Betterment because so many people were coming to me and saying, Jon, how should I invest my money? And sure, Vanguard's out there, Fidelity's out there, and a common answer to those people would be just go to Vanguard, select some investments, maybe an ETF, maybe a mutual fund, and you'll figure it out. The problem with these is nobody does it. And if they do go out there and try and do it, many people make mistakes. I'm not talking about your typical Bloomberg audience, right? But the 99% of people who don't invest for a living. And we made Betterment for them so that anyone can have a good way to invest.
Now, the mistakes you're talking about is what? A desire to time the market?
Exactly. People try to time the market. They try to, they buy a mutual fund that's been going up and then will underperform the other funds for the next 5 years. They'll get in and out at the wrong times, those kinds of common mistakes. And the average investor underperforms the fund that they invest in by 5% per year.
And your goal is to what? Match the index or match a particular index?
Exactly. We try to just help people match the market. So that 5% gap that people experience, we're trying to close that. We think that's the key to actually helping people get better long-term returns.
Now, what type of funds? So everyone, they sign up, they all go into the same portfolio. It can change slightly, right, based on their risk profile. So if you're very risk averse, you'd maybe have more bonds in your particular portfolio, but you don't actually see the individual investments that you're making.
You do. We're totally transparent. Transparency is one of our core values. So we have a treasury bond portfolio and a stock market portfolio. It's a little bit like the next generation of modern portfolio theory. And all you do is you move a slider to set the level of risk that's right for you. But there's just that one portfolio. So we make it easy above all else.
Now, what's one of the appeals of your site is that it's for every investor.
Yep.
So is your typical client a small retail investor? Could it be an institutional client?
We see all retail investors. We're not for institutions, but we see all types. We see the very sophisticated investor who has an account at Schwab and at Vanguard, and they're just sick of managing and rebalancing those accounts, and so they're moving large amounts of money to us. And we also see a lot of first-time savers and investors who just want something that gives them a better return than their savings account.
Now, you launched just in May of this year, right, at this year's Tech Disrupt conference here in New York. How many accounts do you have open?
So we've opened 6,000 accounts, and we've been growing 20% a month for the last 5 months. It's been hard to keep up with the pace of growth, but very exciting.
And where are people typically coming from?
So people come from all over the country. We've got customers in every state. We've got a huge number of accounts right here in New York City, and we can. It's only U.S. domestic customers at this point.
And right now, speaking about U.S. and domestic, all the funds or the investments are U.S. and domestic focused.
That's right.
Now, is that something that you're going to expand over time?
Absolutely. We think that we started that way because we thought it would be simpler for people to understand, but we know now that we should have some international exposure in that portfolio, and we're moving to do that in the next month.
And tell me about the fee structure, because that is something that I think a lot of people find very confusing, is the fee structure for mutual funds. It depends on the mutual fund. You have to look very closely at the document. Is there a sales load? Are you going to be charged a fee for getting out of the fund? Then you pay a management fee. So one of I think your marketing points is the simplicity of your cost structure.
Exactly. So the typical thing is confusing, lots of hidden fees. Betterment is simple and transparent. So we just have one fee. There's no minimum balance. There's no transaction fees. The only thing that we charge is an assets under management fee. It ranges from 0.3% to 0.9%, depending upon your balance.
All right, Jon, appreciate you joining us, giving some insight into a new company. That was Jon Stein. He's the CEO and founder of Betterment.com.